This is where we begin to diverge from most market profile teaching that's out there. What is a composite? Composite simply means to be made up of various parts or elements. That's what that word means. Instead of just looking at movement like we have so far from day to day, or even like micro pour highs, the periods within a day, now we're going to start to take more of a look at that day-to-day movement and define it and treat it as one unit rather than keeping it all separate. I'm not the only person that uses composites. There are several prominent people out there that use composites, but I don't think they get it quite right. A lot of them just use pure time base. So instead of just looking at our daily TPO charts and whatnot, they will say, I also look at weekly profiles and monthly profiles, and that gives you a good higher time frame view and dimension on what you're looking at. That can be very valuable, but it doesn't quite nail it. And we'll talk about that, why, essentially it comes down to, spoiler alert, remember we want that true measure of value. The truest measure of value we can find is going to put us in the best position to trade profitably. Other people look at, I think this gets closer and closer to the right story. Some people look at huge turning points. So if you had a big sell-off in the S&P and then you started the rally, okay, and it was a very clear kind of swing low on a higher time frame, a daily chart, a weekly chart, some people would say, okay, I'm going to start building what I call a composite from that swing low forward, and we're going to look at all of that volume or all of that profile as a composite. Other people use volume profile micro composites, and they will actually do more of what I do, which is group certain sections of activity together. But volume profile doesn't quite do as good of a job with value specifically as market profile. So we're adding this powerful higher time frame dimension. It's more custom to what the market is doing, a more true measure of value. And you remember that example the other day where we had balance, head fake higher, trended lower, balance, and then spike higher yesterday. And the value area was just out of whack with those two distributions. We split those distributions apart into two separate days, so to speak, and we had a better true measure of value. Same kind of concept here. So here's 4 days, 4 daily pit session profile. I don't even know what the market is. It's either crude oil or S&P, because that's where all my examples come from. Watch those 4. What we're going to do is combine the first 2 now. That's called a 2-day composite. Okay, we had 4. We combine days 1 and 2. Boom, 2-day composite. Now we're going to do a 3-day composite, because we're not really going anywhere, are we? We had a head fake higher out of that composite structure, and then just more balance, right and kind of in the middle of that. 3-day composite. Okay, now day 4 looks like a little change in the dynamic, right? Strong drive from the point of control, value migration clearly higher, that type of thing. So we're gonna go through a ton of examples of this today and whatnot, but this is your first example of studying building a composite using a composite. Just the concept. So we're going to create value areas from it. This is what we're going to use to define that current market condition that we talked about yesterday that was so critical for being able to apply the right strategy or tactics at the right time in the right environment. Should I go with this ascending wedge breakout pattern here? Or is this not such a good idea? Should I actually look to fade the failure of patterns like that or something? We're going to look at how to build them, get you comfortable with that. We're going to talk a little bit about maturity of composites. It's a lesser factor, but still something I think is worth talking about. And then we'll ultimately get into how price moves. So the value area itself becomes our key reference. Key reference. We gauge future price movement. So if we've got a 3-day composite, we're going to gauge where are we opening relative to that composite value, where are we trading above or below that composite value, are we rejecting it, are we accepting and holding inside it, what are we doing relative to our composite structure value area. Okay? Ultimately, this becomes fairly simple. This isn't rocket science. There are a lot of nuances. It takes time to really kind of see a lot of different examples and get comfortable with it. But it's actually quite simple, as you'll see tomorrow when we really go through, here are the trades that could possibly exist. And I'll tell you, there's not that many of them. It's what I call structure or market structure. When you hear me talk about that, I'm talking about composite value areas. I will use something called an extending rectangle drawing type. You'll see me do that on the charts. This is really important. I will set other charts, okay? So I don't just stare at market profile charts and trade off that all day. I have intraday charts. I look at volume-based short-term charts. I look at order flow, all kinds of things, okay? But what I do is that composite value area, I will draw it on that chart, and I will tell my software, take that drawing and put that drawing on my other charts too, so I don't forget where I'm at. Because I'm now going to go study the lower time frame. I'm going to go study price action. I'm going to study order flow, what we're doing. But it's so easy. We should probably all know this. It's so easy to kind of lose the forest for the trees, right? We get lost. We get sucked into that lower time frame. So it's a simple bullet point here. I put this drawing and I put it on my other charts too. Let's move on. No, it's very, very important that you keep structure, keep the current market condition at the forefront of your mind and allow that to guide your current decision making, no matter how short term your analysis narrows down to. Hugely important, current market condition. Constantly want to know the answer to what is the current market condition, okay? And it's pretty simple. We can either be bouncing around inside a composite structure, or we can have broken away from a composite structure, in which case we would now be imbalanced. Are we balanced or are we imbalanced? Okay? The market condition determines the appropriate strategy to apply. We also need to know the answer to, this is huge, what would need to happen in order for the current condition to change? Okay? Too many times, and I get this question a lot, people say, well, you know, if you use hypotheses and if you form these bias, a lot of times when I've tried to do that, I end up fighting the market, right? That's kind of a logical progression to think can happen. That is true if you just say, current condition is this, and you kind of forget about it and you just bang your head against the wall and continue to apply that strategy. You have to know exactly where the current condition, before it ever happens, you have to be, we talked about this yesterday, creativity, right? You have to have an imagination. Boris and I talked about this the other day as well. In thinking ahead as to what might unfold, where might we go, where shouldn't we go? If we do go there, what are those implications, right? Where does the current market condition change? And really, it can become quite simple with composite structure if we're rotating around inside that value area. If we start to hold outside that value area, that's a change. We're now attempting to get imbalanced to the upside if we're above value high, and that's a strategy shift. This also benefits our psychology around stop outs and our psychology around being wrong, okay? A lot of times people just put a stop somewhere and they really root for the market to go their way, and it's a negative thing if you get stopped out. It's just like, man, I lost, you know, it's just a bad thing. In the intro course, we talked a lot about this and how to change that belief system about what that is. And I think this helps a lot here. I've been in situations, and Boris knows this, he's watched me traded live for how long now? Yeah, 6 months. He's watched me trade every day. There will be times where I'm actually in a position, let's say it's a rotational trade inside of balance, and I'll almost be like, I'd love to get stopped out of this trade. I'd love for us to break below this balance area. And in fact, when it does and I get stopped out of my long trade, I'll be excited. I'll say, oh yeah, this is big opportunity now. This is even better. This is a better market condition to be in. There's more opportunity on the table now that I've been stopped out of that trade. Let's go with the shorts here and let's really press it. So hugely mental psychology difference around, oh, it never works. I just got stopped out again. That's probably the low tick too. No.